itself while all this is happening. And I guess as the market doesn't move higher, as it did for 12, 13 months, that slowly that wrings some of the bullish sentiment out of the market, which is what we probably need, Jeff.
Well, I've never seen sentiment swing so fast. I mean, going from euphoria, basically, at the end of January, you know, a 12% correction, you have people on TV talking about this is 2008 all over again. So I think a lot of the bullish sentiment has already been wrung out of the market, and I don't think we pull back much here.
Right. You need that, though, because otherwise, if you knew a 10% correction was just a 10% correction, everyone in the world would know to buy it, and then it doesn't work that way. You got to have people telling you it's not 10, it's going to be 20, and then you stay out, and all of a sudden it's back to down 2, and you didn't buy, I guess, Michael. So the market is diabolical in the way that it tries to all these head fakes with people. I don't know how they do it. I don't know how it does.
Well, you know, you're going to have a lot of churning through as a result, because, you know, looking ahead for the next couple of months, there's not going to be the kind of big news that we saw over the past month. So I think the market's going to turn around for a while for exactly those reasons. I'm not really worried about how far down it's going to go. I think Jeff's right about that. But I do think it'll be interesting to see whether the market can push through its previous highs. That's the more interesting question. And we'll be looking to what the Fed says today. I don't think it'll be very interesting, frankly. I think we already know they're going to take a slightly hawkish tone. But what about what happens in March when Chairman Powell's first meeting takes place, and they should hike a quarter point, but what will they say with that? What are we going to see with first quarter earnings after we've fully digested the impact of the tax cuts? That's when things start to get interesting. And I think at that point, we can start looking to say, hey, we've got another year of double-digit earnings growth ahead of us. Stocks are no longer expensive because we've had some of that wrung out. I think we're okay for a while. But so, it's going to be a churn through there.
If you were to look at all the positive things in the market, you know, you look at corporate earnings, you look at consumer and business confidence, you look at maybe GDP doing a little bit better than the last few years. You look at all these things, and it's easy to be bullish. And when you get a sell-off of 10, 12%, you wonder whether you're missing something. You know, it's like, can I count on my analysis of the fundamental backdrop? Can I count on that being accurate, that there's nothing wrong? Is there nothing wrong, Jeff? But what worries me is that we just assume that the Fed was able to, you know, all these extraordinary actions that it took during the crisis and afterwards and stayed for a long time. My big worry is that somehow that's where the bubble is, that maybe they have trouble extricating themselves. Could that be a major problem for the stock market, or you don't think so?
I don't think so. I think rates are going to inch higher. I think Michael's exactly right. I think you're going to get a 25 BIP increase in March. I think 4 increases this year are already baked into the markets. And his point about earnings is spot on. ISI came out, I think it was a week ago, with $170-some in earnings for 2019. And I don't think that's fully discounted in the equity markets.
So, Michael, you don't think that central bankers around the world have inflated the biggest bubble that we've ever seen, and in this case, it's bonds, and that's going to pop someday, and we're going to lose control of how we manage these slowly rising interest rates? That won't be it. We're going to be okay.
No, I think that the central banks are figuring out on the fly how to gradually let some of the air out. I mean, come on. We've had a 50 basis point increase in the 10-year in 6 weeks, and the world didn't freak out about it. We had a small correction.
Well, kind of did freak out about it. I mean, we went from 2.5 to 2.8, and the market lost 12%. What if we go up three points?
And they gained it right back. Look, the key thing also that we haven't talked about is the spreads. That is to say, what about corporate bonds? They're trading so tight to governments right now. To me, that tells us that the bond market, which is usually on top of things, is not worried about corporate profits. So the overall level of interest rates will creep up. That gives the Fed room to raise its rates gradually without inverting the yield curve. That means we have less risk of recession. I think that a steeper yield curve, slightly higher interest rates on the long end, that's not a problem. That's a good thing.
So, Jeff, last question, or either one of you gentlemen. So inflation is not all of a sudden going to just accelerate. Like, we saw a couple of scary numbers, and that's what people were. So that's, if inflation were to accelerate quickly, and these guys realize, wow, we don't need 4 hikes, we need 8 or 10 hikes over the next year and a half, You don't think that would do it either, Jeff?
Yeah, I think if you raise rates 8 to 10 times, I think that would put a damper on the equity market.
That put us back to 4%. That's, I mean, I would have killed for 4% on a 10-year when I was a stockbroker.
It's not going to happen.
I remember those days.
There's no sense of inflation like that. It's just not there.
Okay. All right.
I agree.
I think this may have been, Matt.
So maybe the Wall Street Journal was right to put it on the front page today?
Matt, do you think this might have been the best interview I've conducted I think when we get done today, I want to talk about this interview as being, what do you think? Did you listen?
So far, so good.
Really, really, thank you. Thank you. But are you taking notes? Did you write down some of my questions? Thanks, gentlemen. Thank you, Michael.
You bet.
You bet.
Thank you, Jeff. What did you think?
I'll critique.